Let's take a look at some charts on ETH for the latest article on Brave New Coin. So I know these ETH articles are long. Hopefully these individual vignettes have various interests for various people. So if you don't care about coding or GitHub commits, you can just scroll past that. If you don't care about mining and hash rate, you can just scroll past that, etc. I like to include everything holistic. That way I don't miss anything myself. So let's take a look at mining first. It's interesting that mining hash rate has increased modestly, but not too much. So this was the difficulty bomb, difficulty bomb, difficulty bomb. These keep getting pushed back. Originally, they're there to encourage the ETH 2.0 transition, which isn't complete yet. Ideally, it's here sometime this year. I don't have a date. I don't think anybody has a date. Vitalik has said it's close, but I don't know if anybody can quantify how close that, what that actually means. At a minimum, we do know that it'll be 32 ETH to be a validator, and it'll be on a beacon chain, I think, and you won't get your stake rewards until the full transition, I think. So there's a lot of question marks still. All that being said, mining looks fine. You know, we're not dropping off the table here. I think the certainty that ETH 2.0 is coming is keeping people from ramping up any hash rate on Ethereum, regardless of profitability, because I think mining's a long-term game in general. So even though ETH may be profitable right now from a hash rate perspective, we're not seeing any new ASICs being developed or deployed that I can see, and we're not seeing any massive spikes in hash rate. These are all the ASICs. So there was actually one May 2020, so I guess you can count that as a new one. I don't see like overt ASIC mining here, because if you did, you'd expect a massive rise, right? So like if people were excited to buy this ASIC, you'd expect this to keep going up, especially like look at this profitability. I mean, this is insane for any ASIC. So maybe I'm wrong. Maybe there's enough short-term profitability here that people are excited, but like the differential here on these two to the layman isn't that much. So why would you even bother buying the new one? Like, I don't know what the price cost is. You know, there's a lot of variables here. More variables than people tell you about, especially when it comes to electricity costs, geographic distribution, seasonality, rainy season, dry season, hydro, all that sort of stuff factors into all of this. But if you're an ETH miner right now, you're making bank pretty much based on ETH price and transaction fees, which are extremely high right now. Not just because of those $2.6 million transactions or whatever that was, those gas extortion things. Just in general, fees are really high for Ethereum. This is blocks per day and issuance. So blocks per day is extremely high, essentially sitting at an all-time high because of block time, which is 13 seconds. Issuance is essentially near all-time lows, but the issue is here, like it was expected that inflation would go down post difficulty bomb removal. So this is the difficulty bomb, right? So if the chain gets more difficult with the same amount of hash rate or less, block times go down, issuance goes down. Okay, great. We remove that difficulty bomb, hash rate keeps increasing slightly, and then we're right back to the previous issuance percentage. So at the end of the day, it's a wash, right? There's no real change here. It's around, what, 4-something%? I don't know what it's going to be for ETH 2.0. I don't think anybody does, but that's always something to consider. How much coin is being minted per day? What is the USD value needed to prop up just bare minimum price if people are just selling every coin they mine, which is just easy to assume. That happens across the board for everything. Now, ETH transactions per day are so high because it's mostly mostly Tether. Mostly is incorrect. It's actually 25% of the total transaction amounts. But from a fees perspective, Tether takes most of the fees over the past month. It's like 2.6 or 2 million, something like that. It's a lot compared to anything else. DeFi in aggregate might be about the same, but overall, ERC20 Tether takes most of the fees when you compare it to everything else across the board, DApp-wise. Another thing people don't really talk about is the size of a full node for ETH. Now, I don't know how many full nodes there are out there in the wild. In general, full nodes are necessary to check every state of the network on every address that's ever happened. So you could say, well, we don't really need full nodes because we have partial nodes that can just sort of check other nodes' values, and if we have this web network of partial nodes that have pieces of a full node, it'll all work out. Ideally, maybe, but if it were me, I'd feel much more secure if there was a robust full node network. Unfortunately for ETH, full nodes are around 4.4 terabytes. They take around 20 days to sync the last time I checked. And again, I don't know how many full nodes even exist. So to me, there's a centralization issue here. There's going to be a further centralization issue with validators and staking, which will undoubtedly be dominated by exchanges. I highly think that's what's going to happen because it's happening with Tezos. 25% of Tezos is sitting on exchanges being staked. So is that really decentralization? I don't know. Just something to consider when you're fed a tale of promising decentralization. There's always caveats. There's always trade-offs. This is transactions per day and fees. So you can see even before, this is average fees over a week. So even before those two extremely high fee transactions, this average was way higher than it had been, since basically a 2-year high. And now forever, this average fee graph will be distorted unless those two transactions get removed from the data set, which I don't see anybody doing. But just keep that in mind whenever you see this spike up here on average transaction fees. One thing I've noticed, because I've been using Ethereum lately, is transaction fees have been between $5 and $12 for ETH, which is pretty high for anything, really. Transactions per day hit a 2-year high. So it's good to see fees rising with transactions per day, because if fees were just rising on their own, that would mean there was major scaling problems. This is more of a minor scaling problem. It's definitely a scaling problem, short term, near term, far term, medium term, forever term. Gas limits are maxed out. So unless they raise gas limits again, which to me, the analog would be block size, even though they're not really close, but that's how I think of it. If they raise the gas limit ceiling again, that would help the fees, but then there's issues with miners and nodes, and there's other stuff going on there. But it's very bullish to see transactions per day at a 2-year high, obviously in a vacuum. And honestly, it's pretty bullish to see fees up there as well. People, the Bitcoin maximalists are going to be upset at ETH for this. The ETH maximalists are going to say it's not a big deal. It's going to get alleviated with 2.0. But at the end of the day, it just means usage. And if people are using it and there's scaling issues, anytime there's a governance issue, that's bullish for the chain. I don't care what anybody says. If there's a governance issue, that means there's enough people who care. There's enough community that cares. There's enough people using the chain that cares about what's going on. This is NVT, inverse metric of economic utility, and monthly active addresses. Again, monthly active addresses also at a 2-year high. Extremely bullish in a vacuum. You can see in general, NVT has been on this uptrend since 2017. I think this is partially inflation related, partially lack of taking DeFi into account here. So NVT is far from a perfect metric, and it's not really meant for other chains than BTC, from what I can tell, just because it doesn't include certain things. So it doesn't include the DeFi transactions, for example, which would bring this down. The other question is it not NVT if we include DeFi, which is kind of sidechain sort of contract thing? That's, it depends how you want to structure that. It would be a different metric at that point, I think. But to see NVT at an all-time high and then have it come way down back into the range, and now it's still relatively high historically. Overall, I just think NVT is kind of garbage for ETH in this scenario, because in a vacuum, this wouldn't be a bullish picture. But looking at transactions per day, looking at active addresses, to me, that's super bullish. I always include this because it's funny to look at, but I didn't actually update this just because there's nothing to update. ICOs are basically gone. There's one that just happened yesterday that was like compound comp COMP. I don't know enough about it to even explain it, but I guess you could consider that an ICO. But yeah, overall ICOs are just dead. ICO treasuries keep coming down, which is bullish. You don't want to see a bunch of supply just sitting there waiting to be sold. As these ICOs get older and need runway to pay for stuff, they're going to sell more and more and more, which is good. The less they have, the better. It's obviously great on the way up because price was getting more expensive. Supply was getting taken out of circulation into these ICOs for a short amount of time. But now, in my opinion, these ICOs, most of them haven't really done anything besides waste everybody's time and money. And their treasuries are down below 1 million at this point. 1 million ETH, which is less than 10% of circulating supply. Looking at DApps on ETH, so 82% of DApps have no activity, no transactions per day, no volume, no users, no nothing. Of the nearly 2,000 that I found listed on DApp Radar, which is a flawed site anyway, but it's one metric to use. Most of these DApps are DeFi related or DeFi exchanges, other than Hex, which is a complete scam. So that's good. That says ETH is growing up. People are using ETH other than for straight up gambling. This is like side gambling, you know? Trading is gambling. Let's be real here. But overall, this is a bullish picture, I think, for ETH. It shows maturity in the dApps. You know, you can argue on the quality of these. You can argue about MakerDAO. You can argue about DEXs. But in general, at the end of the day, Nest, I think, is a scam too. At the end of the day, this is more bullish than bearish for ETH. Looking at ETH locked in DeFi, you want to see this continually go up, especially as ETH ICO treasuries go down. So this just gives ETH another job, another place to get locked up in the supply. Locked is also a loose term. It's not really like a CD or a certificate of deposit where there's a set period of time where it's vested or whatever. Some of this stuff is like that. Most of the stuff isn't. So it can easily just be, you know, sold in a minute after you unlock it. So it's not really like locked, but it's good to know that supply isn't just sitting on an order book waiting to be sold. This is Google Trends for Ethereum. It's actually modestly up over the past year. It's not sitting at lows like most coins are right now. You're seeing like higher highs, higher lows. Obviously, you want to see it, you know, breaking previous local highs. This just says, is there grassroots interest in Google searches for the word Ethereum? What is Ethereum? Why is Ethereum? Who is Ethereum? Where do I buy Ethereum? That sort of thing. Where do I stake Ethereum? These tend to either lead price or correspond with price. So it's always good to see this popping up. Not too bullish in its current state, but it's definitely not bearish. All right, let's go to technicals. We have Bitfinex open interest, which is at a staggering 400 plus million USD notional value. Longs are like 90+%. Definitely a long squeeze here if somebody wants to try and squeeze this. The problem is most of these longs are so above water at this point. You would basically have to break 120, I think, to get any of this to roll over. You're not, if you're long up here, you're not going to get nervous until it's making new lows. At least me, that's what I'm looking at it, is my opinion. VPVR here has resistance at, what is this? Or support at 220, resistance at like 300, yearly pivot at 300, local high at 300. So lots of resistance at the 280, 300 level. Lots of support at 140. I don't see this making new lows this year, honestly. I really don't. It's interesting that this volume continues to drop off the BTC as well. Usually that means there's some pattern brewing here. I don't really see anything. You might be able to argue inverted cup and handle. It's not a frank inverted head and shoulders like it is building on BTC. So I don't know what this is. There's a minor bear div here that probably has faded a little bit. You're getting a higher high in price, lower high in momentum. 5200 cross bullish since a couple weeks now. So the long side is definitely preferred. And even when we look at Cloud here, Cloud likes the long definitely. It's like the long since probably in mid-April at this point. All this looks really good for the long side. The only issue I have is this TK cross. So this is like the nuance within the trend. If you have a downtrend and you get a TK cross recross, then it says, okay, that's the re-short entry, right? There's also a pattern here, nice little triangle. Similar here, I'd be looking for that cross recross or a retest of the Kijun, something like that, before I'm super confident that this is going to keep going. Right now it just looks a little stalled. It's definitely bullish, but it's a little stalled. The pitchfork looks fine for multi-week, multi-month trend. So this is just a trend channel with 3 specific points on the chart. In general, you want most of the price data to be in the middle here. This is overbought. This is oversold. This yellow line, median line, is where price wants to live most of the time. So if it's consolidating in and around here or bouncing around here, that's what you'd expect. So nothing too exciting at the moment for this, but definitely worth keeping an eye on over the next months. Because if we go to 750 or if we go to 130, that should be pretty well telegraphed as a buy and sell signal. on the pitchfork here. And then lastly, ETH BTC has kind of done a bunch of nothing. This is the 2-day chart. It's above the 200. It's above the cloud. Definitely leans bullish. However, it's still consolidating at this historic support resist level of 0.25. The 15 to 200, which are the 100 and 400, aren't cross bullish yet. And this is obviously tightening for a massive mega squeeze. So to me, this does lean bullish, and it does point to 0.35, this previous zone. So I think it looks good for up eventually. I don't know how and when that happens. I don't know if that happens because of ETH 2.0 fundamental FOMO. I don't know. I don't see this breaking these lows this year, just because this consolidation to me looks pretty bullish. The long entry is just above 0.25. At this point, any higher high, I think, and you're good to go for ETH BTC.